Hello everybody and welcome to another amazing video of DIY investing. We have one of the biggest updates this cycle set to be announced in September of next month, and that is the Fed meeting and talking about lowering of interest rates. Every single time that the Federal Reserve has ever lowered interest rates, it's created some of the biggest bull markets for Bitcoin, as well as the stock market and many other asset classes as a whole. Every single time they lower interest rates, it causes a massive amount of new buyers lending money, loaning money, and in turn buying up assets and driving up prices. Next month, there's talks about this being the very first rate cut that we've had since 2019, shortly after the COVID capitulation, where Bitcoin went from $3,200 and $1,500 in a year and a half. As Bitcoin is now sitting at prior all-time highs, altcoins are looking ready to break out. I've got a lot of confidence that this is going to be very similar. So for today's video, we're going to be breaking down what the data shows, what the charts are telling us, so that we can be positioned and prepared to capitalize on all of this new bullish momentum coming very soon. Thank you guys so much for tuning in. If you find any value, please do me a favor, hit that like and subscribe button. And with that being said, let's jump right into this amazing video today. Now, right off the bat, guys, I wanted to read this article from CNBC because this is going to be speculation around these coming interest rate cuts that the Fed is talking about for September. Fed minutes point to likely rate cut coming in September. And for you guys that maybe don't understand as much about what rate cuts are, what impact they have on the economy, as well as the prices of assets, this article does a very good job of explaining exactly why it's so important for the prices of crypto. Inside of a rate cut, if rates occur, the Federal Reserve would reduce short-term interest rates, specifically the federal funds rate, during their upcoming meeting in September, with more rate cuts likely to follow later this fall. This is the rate that applies to commercial banks when they borrow and lend to each other, and in turn influences the interest rates that apply to many other short-term loans. Over the past 2 years, in 2022 and 2023, the Fed rapidly increased interest rates to curb rising inflation. As Powell indicated today, cuts would signal a shift in focus and bring into a better balance the risks between inflation and rising unemployment amid growing concerns about a possible economic recession. This is very important because if we're talking about the Federal Reserve finally cutting interest rates, it means that banks are going to be able to take out bigger loans, and then they're actually going to be able to invest in more risk-on type of investments, like a Bitcoin or like the stock market, and this in turn fuels the prices of these asset classes higher. What does it mean for markets and investments? A reduction in interest rates would likely lead to lower borrowing costs for businesses too, which would stimulate economic growth by encouraging expansion and new hiring. Additionally, lower rates generally provide a boost to financial markets as the outlook for economic growth and corporate profitability improves. For these reasons, investors often view rate cuts as positive, driving up stock prices and improving market sentiment. Now, coming over here, quantitative easing is the #1 driver for all of our markets over the last, 12 to 15 years. Ever since the 2008 financial crisis, the Federal Reserve has started quantitative easing as a way to ultimately curb inflation and in turn stimulate the economy and cause more people to want to be building, expanding, all of those things. To explain what quantitative easing occurs when the Fed buys long-term securities to boost the economy. It increases the money supply and lowers long-term interest rates. So basically, they're printing money, buying up securities with that money. It makes it easier for banks to lend and people to borrow. This in turn ultimately boosts the economy. So as we're talking about all of this, it's very important that we look at the actual data and explain exactly how this has driven up the prices of crypto, how it's impacted the stock market, and ultimately what it means as we're getting closer and closer to that September month, where the odds are they're going to actually be lowering and cutting those interest rates. Evolution of the Fed assets. We can see that ever since 2008, each one of these green lines indicates where quantitative easing started. We have one here in November of 2008. That was the beginning after the 2008 financial crisis. We have another one in December of 2010, and then we had a third one take place in September of 2012. All three of these were huge drivers for our stock market, were huge drivers for Bitcoin as a whole. And then it was all the way over here, pretty much the ending of that 2017 bull run, that we ended up seeing them actually go to quantitative tightening, where the Fed actually started to unload some of these securities instead of buying them. And it was all the way back over here during March of 2020, during the COVID capitulation, that we ended up seeing the Fed go back to quantitative easing, rebuying those securities, rebuying all of those different assets, and then that was what we ended up seeing drive all of the balance sheet much higher, along with the stock market, along with the prices of crypto. Now guys, we're going to come back and look at every single time the Federal Reserve has ever announced QE or QT, quantitative easing or quantitative tightening. We can go all the way back to the beginning of 2009 when Bitcoin was first listed on exchanges and we had price history, and we can see that at this time we had just announced the secondary form of QE, because prior to this Bitcoin didn't even exist. It wasn't even trading yet. So as we get this secondary green line where the Fed announced that they were going to be doing more QE, we can see that that is this green box right here. At the time, Bitcoin peaked at 50 cents, pulled back to about 19 or 20 cents, and then we really started to rip shortly after that. And this was the very first cycle for Bitcoin. I think a lot of Bitcoin's cycle was influenced by the coming lowering of interest rates, by the Fed actually buying up some of those securities, and it caused the market to really start to break out in a bigger way because the stock market was also performing well inside of that move. Now, as we can see, this takes us to our first bear market. Bitcoin drops from $32 all the way back to $2, and then we can see that we get our second for Bitcoin, but third announcement of quantitative easing, and that's right here, shortly after 2012, basically the beginning of 2013. That's where we get this third input point from the Fed announcing that QE, and we can see that if we come back over and look at Bitcoin, Bitcoin was right on the verge of making a new all-time high. It had just started its new uptrend, higher highs and higher lows throughout that consolidation, and then it was right at the point of the halving. It was actually right before that halving, QE was announced, and we can see that the price of Bitcoin absolutely exploded in 2013 and gave us basically our biggest cycle that we'd ever seen. Bitcoin went from $2 all the way up to $1,250, and it was one of the biggest, most powerful cycles up to that point. Now, we had continued to have QE throughout the entirety of that point, and if we look once again at the data and what it shows, we had QE running from all the way from 2008 and then all the way until the ending of 2012, and all of that ran basically until the ending of 2017. And if we look at where QT starts and QE ends, it was right before Bitcoin went on its final blow off top. That was the final moment that we ended up seeing, and then that ultimately led Bitcoin to its bear market. And so I do believe that the QT is going to be more of a negative thing because they're going to be raising interest rates. They're going to be actually de-risking their securities that the Fed accumulated during QE, and then in turn it causes the markets to pull back. There's less economic growth because of the higher interest rates, and all of those things ultimately impact the prices. However, even though we ended up seeing one more blow off top, that's what ultimately led Bitcoin to that big 2018 bear market. And if you guys notice, we went through that entire consolidation after our bear market, that first move to 14K, and it was shortly after that coronavirus capitulation that we saw the Fed announce QE once again. And when we're looking at the Fed, we can see that it was right at that coronavirus dip that the Fed announced QE, and they bought up their biggest amount of securities that we had ever seen up to that point. When we're looking at the price of Bitcoin, that was right when Bitcoin bottomed at $3,800 and instantly rocketed all the way up to $65,000 and $69,000. The most recent time that we have had any announcement was when the Fed actually announced that they were discontinuing QE and actually starting quantitative tightening. And that was when Bitcoin collapsed from $30,000 all the way to about $16,000 in the summer of our bear market. So what I've noticed with quantitative tightening is it can kind of happen at any point inside of Bitcoin cycles. It's not as correlated, but the one thing that is universally correlated is quantitative easing. Every single time that the Fed has announced quantitative easing, it's had an absolutely monumental impact on crypto. Arguably, it was more impactful in the early days, but I would argue that with our last cycle, it was the exact bottom of our bear market, or what I should say, the coronavirus dip, that we ended up seeing quantitative easing start, and that gave us our last bull market. So every time we've ever had one of these quantitative easing announcements, it's caused the price of crypto to rocket substantially. And the great thing about us talking and speculating about what's happening with Bitcoin today is the idea that next month in September, they're going to be finally making these same rate cuts. About the history of quantitative easing producing all of these massive bull markets that we've seen up to this point, with crypto and Bitcoin being such a global currency at this point, where we have presidential candidates pivoting, we have governments buying it, we have institutions buying it. I really do believe that we're going to see the prices of crypto balloon substantially. And the great thing about this version of QE is Bitcoin's already sitting at those prior all-time highs, right? In the last cycle, It took us the very bottom of the coronavirus dip before the Fed had to do an emergency meeting and actually start buying those treasuries, lower those interest rates, and cause the market to blow up. Our last cycle was 100% caused because of the hyperinflation and the printing of more money through the Fed. They were buying up those treasuries. It was causing this short-term demand just to save the economy from all of the turmoil that was happening. It was at the very end of 2012 that we had our secondary QE, and that caused the price of Bitcoin to absolutely balloon to insane levels. A lot of people look at the halving in 2012 being that main driver, but truthfully, quantitative easing came before the halving, and then it was after the halving that everything kind of took off. And so every cycle, I think that QE has more of an impact on the short-term prices of crypto than anything that we've ever seen up to this point. And when we're talking about a scarce asset class with global adoption for the very first time ever, I really do believe that this cycle is setting up to be much bigger in comparison than anything that we've ever had. The data is showing us that, historically speaking, every time they've announced QE, they've lowered those interest rates. It's been very bullish for crypto and the stock market as a whole. With crypto already performing so well up to this point, I've got a lot of confidence if next month they do actually end up cutting those rates and we do move towards quantitative easing, this is going to be the last moment that we have to really accumulate any crypto in this choppy environment before the real upside sets in. So I wanted to give you guys this video as a way to map out the data, explain why this is so important for crypto, and why I do believe that this is what's ultimately going to be fueling Bitcoin to go all the way up to about $250,000 to $300,000 per coin. We have a lot of factors that are going to be driving prices of crypto this cycle, none bigger than all of the fundamental announcements that we've had between governments, presidential candidates, between institutional investors. All of these things buying crypto are very bullish, but nothing is going to be more bullish than quantitative easing because the Fed ultimately dictates the prices of the market, how the economy does. And, with them actually going to be looking like they're cutting interest rates, I've got a lot of confidence that it's going to be very bullish for crypto prices as a whole. So guys, if you found any value in this video, please do me a favor, hit that like, comment, and subscribe button. If you want to see anything on buying, selling, trading over this cycle, you definitely have to join and sign up for my Discord server. All the trades that I post get posted in there. So if you guys do want to follow along with anything that I'm doing, when I'm going to be taking profits at the end of this bull market, meme coins, all of those things, everything gets posted inside of that Discord server. So if you want to sign up, my website is linked below. From there, you can get lifetime access. And then I'd love to have you guys actually a part of that group, trading and investing along the way. Because I'm telling you guys right now, I am so excited for this cycle because everything is lining up for this to be the biggest one of all time. And this is where the opportunity lies. So if you guys want to check it out, links are in the description. With that being said, thank you so much for tuning in. I'll catch you guys in the next one. As always, peace out.